Thank you for coming here this morning for the 2019 Investors Day for Polymetal. My name is Ian Cockrell. I am the new chair for Polymetal, freshly minted yesterday. I will, in all sincerity, I will leave you in the very capable hands of Vitaly, our CEO, and Maxim, our CFO, and I promise not to answer any questions, because it will probably not be fair for me to answer them. Certainly not anything company-specific, but around the market and the gold industry, different story. But welcome here today. I have here, alongside our two executive directors, we have some of our other non-exec directors here. We have Tracy Kerr. Thank you, Tracy. Christine is here somewhere. Oh, there she is. Thank you, Christine. And Oliveira, our senior independent. Thank you. There's Ollie over there. Regrettably, a couple of our other directors are not able to make it due to unforeseen circumstances, but they're certainly here in spirit. I think without any further ado, I would like to hand over to Vitaly to take you through the presentation. It's clearly been a very successful year for Poly, and certainly the company is well set up, I believe, for some exciting future ahead of it. So, Vitaly,
thank you very much.
To you.
Well, ladies and gentlemen, welcome to the Capital Markets Day. Today we will concentrate more on the ongoing business of Polymetal. We will cover corporate governance and ESG issues. We'll talk about midterm outlook, both on production and on costs. We will discuss capital allocation principles and some of the smaller projects now at the existing operations. And we'll give the general operational and exploration update, focusing on the key issues for 2019. We will conclude with giving you a short update on our two key growth projects, Nezhda and POX-2. Just a brief reminder of how our portfolio looks like today. Still heavily weighted towards the Russian Far East, but with a very significant presence in Kazakhstan. We are the second largest gold producer in Russia. In terms of the board composition, Ian Cockrell has assumed the position of the chairman of the board as of yesterday. Two of the long-standing directors have left the board. Bobby Gottsell, the chairman, and Jonathan Best, the long-standing head of the audit committee, have left the board, and clearly the company is very thankful to them for their role in growing the business and establishing us as a bona fide member of the LSE premium listing. In terms of the corporate governance and ESG achievements for 2018, I would like to highlight a very successful board succession program. We have recruited 3 new independent non-executive directors, including the chair. I personally believe the process was very rigorous, well-structured, and has resulted in the personalities of very high caliber, which definitely strengthen the board. We continue to strive to ensure management and board diversity, with a particular focus on the gender diversity at the management level. I am proud to report that in 2018 we have promoted, first ever in Polymetal's history, women to the positions of the managing director of an operation at Svetloe, the chief engineer, roughly corresponding to VP production at Kyzyl, and the first chief design engineer at a major development project at Nezhda. We are very keen to establish a robust employee engagement in board activity. Here today we have the participants of the Young Leaders program, which is a traditional instrument within Polymetal to expose high potential young individuals to the London market and what it entails. We're also in the process of a formal and structured board engagement with broader workforce, and we'll report on the results later in the year. In terms of ESG, the focus last year was on ensuring transparency and getting our efforts recognized by outsiders. And I think we have done very well on both environmental, social, and disclosure fronts. In terms of the ESG leadership, we already have mentioned multiple times that we were the first and so far only Russian member of Dow Jones Sustainability Index. We are rated very highly by Sustainalytics, first among 47 mining companies from developing countries. And we have recently placed in the second decile of Thomson Reuters rating for ESG among all companies. If you stack Polymetal up against other industry participants for environment, social governance, we come significantly better than both basic materials average and gold mining average. I think in the sector, which has been plagued particularly recently by ESG issues, this shows our commitment to the leadership in this particular direction. Safety performance for the management team remains #1 priority in terms of the ESG. Now we have had meaningful improvement since 2015. Unfortunately, in 2018, we have not been able to record a fatality-free year with one fatality at MySquare. And one fatality at MySquare this year. However, we maintain the view that zero fatality working environment is achievable, and the management is strongly motivated personally and incentivized financially to achieve that goal. We also decided to provide some benchmarking against the London-listed mining peers. We believe we compare reasonably well against other companies in the sector. Again, this is not to signify that our work is done, but just to demonstrate that we take safety very seriously, and it remains very core to our operational and strategic priorities. Given the highly increased prominence of the tailings storage facilities in the industry following the terrible disaster in Brazil, we decided to specifically address this issue. Currently, Polymetal has 9 operating tailings dams and several dry stack facilities, which obviously are not as prone to any types of incidents. Now, we firmly believe that the responsibility for the proper design, construction, and maintenance of the facilities rests with the company. Clearly, we do have regular external audits, but we believe that we cannot rely on external specialists for something that has potentially significant risks for safety and environment. So we take this responsibility fully in-house. We actually received, along many other mining companies, the request from the group of investors for the full disclosure of TSF details, and we are committed to respond to that request, both directly to investors, and we'll also place the full disclosure report on our website. We hope this will be completed by around 20th of May. In terms of the strategy going forward, we believe that dry tailings should be applied whenever practically possible. As a result, both our new projects, Nezhda and POX-2, will utilize dry stack tailings, which, as I have mentioned, are significantly less risky. And we also are converting one of the operating facilities, Omolon, to dry stack. This process is expected to be completed in 2022, early 2022. For 2019, the priorities are pretty clear. We are focusing on setting the public targets in terms of reducing environmental footprint, including water consumption and full carbon footprint, including the carbon footprint of the value chain down to the final product. Clearly, we will continue the initiatives that I have described early on today. And turning to midterm production outlook now, I think you're well familiar with this page by now. It has not changed for the last, I guess, 12 or 18 months. We still expect several years of relatively flat production, followed by meaningful increase once Nezhda ramps up and POX-2 starts contributing to the production profile.
Yep. We will now move over to the cost side of the business. This page also might be already familiar. This reflects the full year 2019 guidance, with the mid-range of the guidance standing at $825 per ounce on all-in sustaining cash cost basis. So this is yet another 5% reduction that we're expecting this year after a 4% decline last year. And the key driver definitely will be Kyzyl, which is expected to generate all-in sustaining cash costs between $500 and $550 per ounce. So Kyzyl will take up approximately 20% of the group's total production, therefore the impact is quite significant. And also closely tied to the change in the structure of production, we have sold 2 operating mines last year, Kapan and Okhotsk, and these were higher cost operations, so exclusion of these from the portfolio is also helping the overall group average. Looking on the cost performance on an asset-by-asset level, you can see that we are expecting, beyond Kyzyl, a few mines that will generate further reduction in their costs. Most notably, I think, Svetloe, which continues to deliver superior results on the operational side. We also enjoy now a full year production, so there is less seasonality in terms of the revenue accretion, and that will definitely help the business. Svetloe is also expanding in terms of the volumes of ore processed. There will be stable performance at Voro despite some continued grade erosion and despite the fact that the heap leaching is effectively finishing its operation. But we also will incur less of the mining costs because the open pit mining is also nearing completion. There will be an obvious improvement at Kyzyl, which we already see in the results of the first quarter. Fully on track, Kyzyl is performing actually better than expected, as you have seen in the quarterly production results. So we are fully on track to achieve 500 to 550 all-in sustaining cash costs there. Stable performance at Omolon. It's been also very robust from the operational standpoint, both on the heap leaching side, which is less material to the cost performance, and on the milling side. Albazino and Dukat, there will be a bit of cost increases this year. At Dukat, you will have seen the grade performance in the first quarter results. These grade levels are expected to be sustained over the course of the year, but yet they're still somewhat 5% lower than the average grades milled last year. And at Albazino, we are increasingly transitioning to underground mining, and that has an impact on the overall cost levels. At Varvara, we expect steady performance, if not improving. We are seeing pretty positive dynamics with mining and transporting ore from Kumar, and that remains kind of the key driver of the asset's profitability. And then we also expect further cost improvement at Mayskaya. There will be some further working capital release this year as the activated carbon from the oxidized material will be transformed into revenues. And overall, we are expecting steady performance from the operating side of the mill. Turning over to the external factors, obviously we are still very much dependent on the dynamics of the foreign exchange. Last year was better than 2017. We already have seen some ruble weakening. The year-to-date ruble performance has been even slightly better at 65.6 rubles per dollar, and tenge was also a little bit weaker, so that's going to be supportive. But turning over to the overall cost structure, rubles in all-in sustaining cash costs are approximately 45% of the total cost base. Then tenge is becoming more significant with the arrival of Kyzyl into the operating structure. And there is still a substantial share of oil, 15%, and the rest, 25%, is foreign currency. So the sensitivity remains there. So far, the macroeconomic conditions have been pretty positive, and there is no expectation in the market of any significant ruble strengthening, despite the pretty strong oil prices. So the only disappointment on the cost side may only come directly from oil, i.e. from the prices of the diesel fuel, whereas the currencies remain supported. In terms of capex, essentially no news here. So we have now fully factored in the capital expenditure, the detailed capital expenditure for the second POX line and Nezhda. Both projects are ongoing, and we are on track in terms of the capital expenditure guidance. We would like to elaborate a little bit more on the structure of the stay-in-business capital expenditure. I will start with the brownfield exploration. It remains a very significant part of the sustaining capex, roughly 40 million per year. We're also investing in life of mine extension projects, mainly development of the satellite near mine deposits. Then roughly 20 million annually is allocated to various continuous improvement projects. So that are the projects intended for improvements in grade, improvements in mining productivity, and so on. And then a significant chunk is obviously invested in fleet replacement and routine upgrades of the tailings storage facilities, which we do as the mining process progresses. And then finally, 26% of the sustaining capital expenditure represents capitalized stripping and underground development. This year you will see still quite a bit of capitalized stripping at Kyzyl, because we are mining still above the life of mine average strip ratio. Now turning over to capital allocation, the focus on dividends remains very strong, and the commitment to pay the regular dividend is there. It is, as you can see, illustrated by the leading number in terms of dividends paid per ounce produced. So we're effectively paying more than any other large or medium-sized gold miner from the gold that we produce. So we are really transforming production into dividends, and dividends remain the first priority in capital allocation before any growth spending, subject to appropriate leverage thresholds. We are progressing in terms of the asset disposal. Just as a reminder, we generated $108 million of proceeds last year from asset sales. This was mainly represented by sale of Kapan and sale of Okhotsk. The proceeds from both deals have been safely received in the end of last year and beginning of this year. The program for the next couple of years is set out on this page. The most material asset on the list is Veduga, where we actually intentionally put a pause on the sale process because of significant positive exploration results from the last year's season. So we are currently finalizing the renewed reserve estimate. This will be available by the end of May, and this will then trigger the recommencement of the sale process based on the updated financial model for the asset. We still have to sell Lichkaz, the remaining small exploration asset in Armenia. So far, I have to say the interest for this asset has been pretty limited. We have a natural buy in the person of the new owner of Kapan. However, we have yet to see whether they are interested at the moment. And then the second material asset is Kutin, which is now in the marketing process. We are also updating the reserve estimate there. This is expected in Q4 2019. but we are already marketing the asset based on the preliminary results of that estimates and the very rough assessment of the asset value is about $40 million. Maminske, still evaluating the options, mainly related to the processing side. The reserve is definitely there, but we are faced with multiple processing options, some of which would require heavy capital investment from the new owner. And then there are two new assets on the list, North Kaluga and Sopka. We have initiated selective marketing of North Kaluga. This is effectively a brownfield for the Vora operation, but given the kind of order of priority that we want to have in terms of processing the Vora satellites, North Kaluga comes last, so it's a natural candidate for sale because we'll be able to monetize the value from this asset sooner through the sale process. And then for Sopka, there is a heap leaching operation that can be potentially sold to an external investors. Again, this is a relatively small operation for processing heap leaching stockpiles there, so that's a natural sale candidate. All of the debt proceeds will be definitely allocated to debt reduction. So we have named the new medium-term target of 1.5 net debt to adjusted EBITDA. So we are targeting some debt reduction in the coming couple of years. Some of this will also occur organically with the stable production and with the reducing cost profile and hopefully with the commodity price and foreign exchange environment, which for now remains pretty supportive. In terms of the debt structure, it remains fully funded from the bilateral banking facilities. You can see the maturity profile on this slide. We don't have any peak repayments before 2021 and 22, but those peak repayments we are planning to address effectively early on using still very favorable financing conditions. So that's one of my targets for this year, to have a meaningful extension of the existing maturity profile, either through refinancing those facilities or those maturities with the same banks, or renewing some of those facilities early on. We are still maintaining a mix between fixed and floating interest rate that helped us to keep a very low cost of debt, slightly exceeding 4% at the moment, and the intention is to maintain that balance, although we see that the potential for further significant interest rate growth is currently very limited. I will now turn over to Vitaly for the operational update.
Yep, thanks, Maxim. Starting with Kyzyl, obviously the asset that is currently the most important one in portfolio. The ramp-up has gone very well. Already in the fourth quarter of 2018, we more or less achieved the vast majority of the design parameters, including, most importantly, recovery. We continue the slow climb up, and the chances are full year performance will exceed the targets previously set. One area where we continue to work very diligently on operational improvement is the breakdown of gold and concentrate between high carbon concentrate and low carbon concentrate. Here, gold in doré represents a finished product from the processing of low carbon concentrate at Amursk POX. Clearly, the goal is to increase low carbon production by as much as possible, because it has a significant cost advantage and margin advantage, and also importantly because it insulates us to a larger degree from the vagaries of the Chinese concentrate market. I would like to draw your attention to the numbers in the lower right corner in terms of the concentrate grade. In the first quarter, at 84 grams per ton, Kyzyl concentrate is probably the highest grade Russian or Kazakh, let's say, former Soviet Union concentrate that goes on sale to China. That confers to us a significant competitive advantage vis-a-vis other materials that get sold to China. Now, again, for us, we are comfortable about the current trading conditions, but until the POX2 is fully ramped up, this represents an area of particular focus of the management because we want to be 100% sure of the security of offtake. In terms of the key lessons from Kyzyl, we now have had full 2 quarters of stable operation under our belt. We saw positive grade reconciliation near surface. This positive reconciliation is likely to continue in the second quarter. Our geological team currently believes that as we move deeper, the actual grade will conform more closely to the reserve model. So unfortunately, this will not last, although even the reserve model grades are very robust. The ore is much softer compared with the design criteria. This is the result of the fact that ore loses some of its hardness when exposed to the elements. It decomposes partially, which obviously is good for mining costs and for processing costs. Now we also have experienced less stable footwall, which is a corollary of softer ore because some of the waste exhibits the same geotechnical, geomechanical properties. As a result, we have currently lower costs compared with planned, higher throughput versus the design. And as ongoing pit optimization continues, we are sure we'll have a much deeper and larger open pit. The reserves update with the new open pit is due in the 4th quarter of this year, and 4th quarter next year will provide reserve update for East Bakarchik, where currently geotechnical and hydrological drilling is ongoing. We have changed this particular page demonstrating the reserve upgrade potential at Kyzyl. We now expect a net addition of 1.5 million ounces in reserves, all from the open pit due to the redesign. And we still expect significant contribution from East Bakarchik and from the resource conversion at the deeps. So we are targeting a net 5 million ounce addition by 2021, and the resultant life of mine we expect to be at about 14 years for the open pit and about 25 years after that for underground mining. So clearly very long-lived asset with very high quality. Kyzyl is definitely the type of the mine we would like to have in our portfolio. Turning to sustaining capex outlook, Maxim spoke at length about the structure of our sustaining capital expenditures. Here we provide the details going forward. Note relative variability in the fleet replacement requirements. This is mostly driven by the fact that in 2023 we will need to replace a significant chunk of the truck fleet at Kyzyl. And in terms of the extension projects or life of mine extension projects, they are relatively stable, although the composition of spending within this, roughly $50 million, is widely variable. So this is the kind of the laundry list of the 7 life of mine extension and general large improvement projects which are included in the current capex outlook. The first 2 satellite deposits for Dukat, and their main objective is to kind of maintain production and cost levels at Dukat despite the continued grade erosion and the impending closure of Goltsova early next year. Then there are 2 projects at Maiskoye, both actually aimed more at cost reduction. Maiskoye backfill project is the change in the mining method, and I will talk about it later on. And the same with haulage, where we hope to significantly decrease all-in sustaining costs by changing now the technology of ore movement underground. Elevator is a satellite deposit for Varvara, and it would come really useful because as Varvara ore body is increasingly depleted, we would like to get more higher grade feed from satellites to drive down costs at Varvara operation. And then there are two projects at Voro. At Voro, open pit mining will essentially cease by the end of this year. And the existing processing plant would largely move to the processing of historical low-grade stockpiles. Obviously, we would like to try to kind of counter that situation. There are two projects that we are currently pursuing. One is Voro Underground, and the second one is the upgrade of the existing processing facility, the addition of the flotation circuit, which would enable us to process refractory and polymetallic ores from a whole suite of satellite deposits at the operation. And this is the breakdown of the kind of the projects within the staying business category. Clearly, for the next 3 years, Voro flotation is the main one, and then MyScore haulage will take up its place as the single most expensive staying business capital project. Turning to just pure operational priorities for operations, we are listing the priorities that we have identified for 2018, assessing how we performed, and stating the objectives for 2019. Now, for Dukat for 2018, we have not ramped up Perivalnoe, but actually that was due to a positive factor, the kind of rethinking of the way the deposit should be mined, and more on that later on. And the priorities for this year all revolve around the reserve replacement and reduction of dilution, because clearly grade erosion and life of mine are the key themes that need to be addressed at Dukat. At Omolon, last year, we unfortunately have not been able to achieve meaningful resource and reserve accretion, so that's a bit of a disappointment. This year, we are moving the open pit mining from Sopka to Yolechka and Birkachan. We plan to catch up in terms of the reserve repletion, and we have commenced the project to convert to dry stack tailings by early 2022, which I have mentioned. At Svetloe, both 2018 and 2019 outlook are very positive. We have been able to extend the life of mine. We plan another life of mine extension this year with the addition of reserves at a satellite deposit, and with the assessment of the economics of the next pushback, which is very likely to be positive. Other assets, here we have successfully met all of 2018 objectives. For 2019 at Albazino, the focus will be on underground ramp up and reserve accretion. A temporary grade decline this year should be just that, temporary, so we expect the climb up to the historical grade level next year. At Varvara, the focus is on cost control, and at MyScore, we are mostly concerned about the development of the two brownfield projects that I have mentioned. Then turning to details on several operations, turning to Perivalnoe, why we have delayed the development of this deposit. Infill drilling have resulted in a very significant change of ore body interpretation. And I have to confess, probably our geologists have been led astray a little bit by the experience at Dukat. So they initially estimated the ore bodies to look mostly like Dukat ore bodies, so relatively steeply dipping veins. Infill drilling indicated that they're more like very big pods of material. So we have had a meaningful increase in the overall tonnage and grade, and particularly importantly, very significant increase in average thickness, which makes the traditional Dukat mining method, sub-level open stoping, inapplicable. So here we'll have something with consolidated backfill. Importantly, metal contained and grade increased by 50%, and we are continuing to move further down, deeper within the deposit. So hopefully, Perevalnoye will actually turn out to be a longer-lived and a more significant contributor to the overall Dukat hub production. At Albazino last year, we have very significantly expanded reserves. If you pay attention, compare the two pictures, not only the overall size of the reserves increased, but also the continuity of the stopes has improved dramatically, and that bodes very well for the costs and the underground operation. Now we will continue to push deeper with the reserve extensions, and now this we hope will allow us to further increase the life of mine at Albazino. At Maisko, it's largely the same story. We have converted a significant chunk of inferred resources to reserves. Witness the right-hand side of the graph where there have been no reserves previously. This is the so-called ore zone 4, which has not been mined before, more or less. This ore zone is materially different in terms of its thickness and dip versus the main ore zones 1 and 2, which occupy the center of the slide. And that actually is one of the reasons we have initiated the backfill project, because the current mining method at Maisko, which is very effective for steeply dipping and relatively narrow ore zones 1 and 2, will not work properly and safely on ore zone 4. The economics of backfill project are quite impressive. We expect, first and foremost, a very significant improvement in grade, and the reduction of dilution will allow us to mine some of the resources that previously have been deemed uneconomic, because the current mining method would leave these resources, when extracted, below the cutoff grade. Clearly, it will come at a cost. Cost per ton mined will increase by roughly 34%, mostly due to the cost of concrete, which we'll need to add to the backfill mix. But the overall return on invested capital is very, very attractive. And in terms of the haulage at Maisko, we have identified the need to change the haulage method as one of the strategic challenges at the mine. As we go deeper, we see not only increased transportation costs, but also significantly increased ventilation costs, which, given a pretty high energy price up there, is a significant consideration. We are currently considering 3 options: the traditional vertical skip shaft, the inclined conveyor belt, and the electrification of the fleet. Given the fact that as much as we would want to electrify the fleet, this is something, the equipment is something that's still in its infancy. We don't have many proven reliable electric trucks, in particular, with the requisite payload. The competition is really between the shaft and the conveyor, and we are currently evaluating both pros and cons, and the goal is to arrive at the final decision in the 3rd quarter of this year. And Voro, this is a very busy chart, but I think it kind of gives you an idea of what we are doing. On both the western and actually it's north to the right. So on both the right-hand side and the left-hand side, part of the open pit. The step-out drilling have identified small lenses of very high-grade oxide material, which is probably not significant but very profitable, given the fact that the marginal tonnage at the mill comes from very low-grade stockpiled material. And more importantly, under the existing pit, there are several very wide and reasonable grade ore bodies which are highly prospective in terms of underground mining. We are currently in the process of evaluating the potential mining method, and the goal is to start underground development in 2020. This will add at least 3 years to the current life of mine. And then the largest brownfield project is clearly currently the Voro flotation project. Now we are currently designing a flotation plant, which is rather a flotation section of the existing plant. That would be suitable to process both conventional gold refractory ores from Pescherny, which is a satellite deposit to Voro, only about 15 kilometers away, and a whole suite of smaller polymetallic satellites. We believe we can start this up by mid-2022, and this should provide additional production for Voro, which, as I have mentioned, is facing significant production decline due to the transition into stockpiles processing. Overall, the goal is over the next 3 years to improve the average life of mine within portfolio from 13 to 16 years. We believe there is significant reserve upside at Kyzyl, and we believe there is significant potential for reserve accretion at existing operations. I would highlight Albazino, Maiskor, and Voro as the most significant sources. And then several words on growth projects. Open pit mining started at Nezhda. Currently, the focus is on road construction. The terrain is very steep, so a lot of excavation needs to be done to establish the pit access roads. On the right-hand side on the bottom, this is the typical kind of opening created by the need to establish a safe and wide pit access road. We already started concentrator building construction. Pretty much the pouring of concrete for the concentrator building is done. I was at Nezhda last Friday. They were the construction teams were finishing up the final touches on the foundations. All of the construction steel for the concentrated building frame is on site. So the erection of this frame will start probably next week. And in terms of the infrastructure, the bulk of it has either been completed or in construction. Most importantly, all of the storage components which are needed to smoothly operate the mine are in place. Fuel, reagents, explosives, everything has been commissioned. And in terms of the POX-2, concluding the presentation, currently the project is in the active contracting stage. We already have signed more than 20 supply agreements with equipment manufacturers. The most important ones are on the page. The bulk of equipment is European, and the two most significant contracts that have been signed are for the autoclave vessel with Cook of Belgium and for the oxygen plant with Linde of Germany. I would like to stress that the fact that we have started preparation for project execution very early. If you remember last year, even leading up to the final board approval for the project, we have invested in detailed design and interaction with suppliers. So now we are benefiting from very quick contract signing, and the suppliers go straight into the manufacturing phase because all of the detailed drawings already have been completed. And that's pretty much it in terms of the presentation. We would be happy to answer any questions.
Hi, it's Dan Major from UBS, and thanks very much for the update. First, just a question on the brownfield projects that you've detailed. Are all of those included in, from a production perspective, in the profile you show on the usual slide? So are all of that CapEx included in the guidance that you've given?
Yeah, the overall strategy is we include always the production and the CapEx kind of simultaneously, and all of the projects listed, they're already in.
Okay, cool, thanks. And the second question, sort of operational side, on the life of mine extensions, particularly at Dukat, do you have a specific target on the sort of potential life of mine extension at Dukat that you see?
You know, to be very frank with you, at Dukat, if we are able to maintain the current life of mine, that will be a good achievement, and I will be fully satisfied with that. Currently, the life of mine for Dukat complex, based on reserves, is around 7 to 8 years. So if we are able to maintain it going forward, I think that will be very positive.
Okay, thanks. And just a final follow-up, I think I asked it at the results call, but in this terms of the sales proceeds that you've shown, is all of the 108 million already received?
All received?
Yeah, okay, so there's no additional, like all of the...
There is no deferred element in the consideration in all of the deals we've done.
Super. And then just final one from me. Can you give us a reminder on the margin environment for third-party concentrate processing at the moment per ounce of gold?
Well, I think the all-in sustaining cost is around 800, maybe 850 dollars per ounce. So last year, third-party ounces generated slightly more margin than an average group-wide ounce. As we go into this year, given the ramp-up of Kyzyl, we'll probably have less of third-party material. Not because it's less available, just because we have less capacity.
Super, thanks.
Yeah, it's James Bell at RBC Capital Markets. Firstly, on the net debt to EBITDA target of 1.5, you know, you've obviously got CapEx going up sort of over the next couple of years. You're bringing those projects on, and that, you know, probably is achievable then. But then you have obviously longer-term growth projects, Prognoz, for example. Do you feel that the cash flow situation in the business, say in 2023 or so, will allow you to fund further growth, or do you feel that that sort of target of 1.5 may creep up higher as you pull the trigger on longer-term growth options?
No, we're actually fully comfortable because it is 2019 and 21 in terms of the capex, where we will have this roughly stable 400 million and also stable production. And then the production will pick up in 2022 and with further improvement in 2023, and this will also be combined with further improvement in cost side, because Nezhda would also have all-in sustaining cash costs lower than the rest of the existing portfolio. So we'll have margin expansion and roughly stable capex.
And production expansion.
And in 2022-23 also coupled with production expansion. So this would definitely allow to fully fund, let's say, Prognoz out of free cash flow without compromising on the leverage levels.
Look, you know, if you compare this chart, it goes like this, and then this chart, and it goes like this. So this chasm, so to speak, which opens, this creates the potential to take on at least another major capital project, and Prognoz so far is the most likely contender, although it's still obviously early days.
Okay, that's great. And then just on the continuous improvement projects, you're spending around 10% of your sustaining capital budget a year on that. is $20 million a year. Should we think of that as having cost improvements, or is this more like offsetting perhaps, say, inflationary pressures? How should we think about that coming through in the next few years?
Some of these projects don't have actually direct financial correlation. So some of them are driven by safety considerations, some of them are driven by sustainability considerations. So in this category would fall the introduction of renewable power plants at Svetloe, or the installation of the fully automatic personnel and fleet control system at underground mines. Some of those projects do have tangible financial benefits, but given the pace of grade erosion, particularly at Ducat and to a lesser degree at Voro and Albazino, the scope of this project is not enough to generate palpable incremental cost savings at the group-wide level.
Okay, that's great. And then just one more, if I may. At Kazil, you've got up to 87% recoveries of gold and con, and you're talking about, you know, potentially the grade dropping down a little bit as you get further into the pit. You know, is that a level, that 87, is that a level you're comfortable with for the rest of 2019 or going forward, or maybe we see that coming back a little bit? I mean, I know it was ahead of certainly my expectations.
Well, I am not comfortable with this level. I think for the remainder of the year we should push higher. I personally think that at least we should get 1 more percentage point improvement for the remaining 3 quarters. I think this is reasonable, achievable. The aspirational goal is 89%. There is a bit of risk about that, but definitely we will not go below the level already established, even if the grade drops down a little bit.
Okay, perfect. Thanks.
Thanks. Good morning. Richard Hatch from Berenberg. First question, your 1.85 million ounce target, how long do you think you can sustain that for?
I don't think we have the 1.5 million is not the
1.85.
Or 1.85.
How long do we sustain?
Well, it actually depends on whether there will be new projects after 2022. Without the construction of the new mine, I think from 2023 to 2028, we'd probably lose about 200,000 ounces, 100,000 ounces.
Okay, thanks. And then my second one's just on Svetloe. Can you just clarify or remind me your life of mine and what the production profile looks like for that asset, please?
The life of mine at Svetloe with the current reserves ends in 2024, if I'm not mistaken. That's right. But we are now in a very, advanced stage of evaluating Level Berezhny, which is a satellite asset of the same type of mineralization. So that will be the key driver for further life of mine extension by at least another 2 or 3 years.
I think we will add 3 years from Level and about 2 more years from the pushback. In terms of the production levels, I think over this, let's say, 10-year life of mine, they will average around 100, maybe 105,000 ounces. So this year and next year would mark a bit of a hump in terms of the production levels.
Thank you. My last two are just on clarification. First one is just on Ducat costs. So obviously with the grade being above the reserve grade, you've talked to a couple of projects. Is your expectation there that you try and maintain costs flat, or do you expect costs to creep up just as the silver grade starts to revert back to the reserve grade?
Well, at Ducat, the completion of mining at Goltsova actually means that the highest cost source of ore will be off the charts next year. Perevalnoye, when it comes on stream, will be the lowest cash cost source of ore. So for the medium term, I don't expect significant cost pressures. We'd probably see flat costs from the internal point of view for 3 years. After Perivalno is depleted, we will be back to kind of the starting point with narrow ore bodies and grade erosion driving costs a little bit higher. However, we hope that in the intervening 3 years, now we will get some additional exploration success that will allow us to maintain the profitability of the operation.
Thanks. Last one, Maisky, the shaft and all the conveyor project, is that included in your capex numbers? I think it is, but just to clarify.
Yeah.
Yeah.
We have included, obviously the conveyor and the shaft capex will not coincide completely, particularly in terms of the timing of the expenditures. Conveyor would probably start a bit early, but end up being less in terms of the overall sum of spending. We have included some type of a kind of middle ground option, so the numbers are subject to change, although I don't think it will have a material impact on the overall stay-in-business capex projections contained within this presentation.
Great. Thank you very much.
Alan Spence from Jefferies. Two, if I may. On Vetiga, how committed are you to selling it? As in, if you get that May reserve estimate new and it comes in better than expectations, is there a chance it stays in the portfolio? And secondly, on dividends, I believe 2.5 times is the ceiling for regular. Should we be thinking about 1.5 being the line in the sand for special dividends?
Yeah, I'll start with the second part of the question. Yes, 2.5 is the ceiling for the regular. I think 1.5 is probably not the ceiling, but the trigger point for the special. That's where the board will start looking at the special dividend. But I don't think it's necessary that the kind of breach of this level would automatically result in the special dividend, because a lot of other considerations need to be taken into account when making that decision. And in terms of Vetiga, let me put it this way. It's not impossible that the asset stays in the portfolio, but so far I think the likelihood is towards the sale option. We'll need to see how the potential buyers react to the reserve update.
Okay, thank you very much.
Hi, it's Dan Shaw from Morgan Stanley. Just one question on I suppose, longer term. You mentioned Prognoz as kind of the most likely kind of next project. Is there anything else that that has kind of come to your attention within, I guess, former Soviet Union that could potentially interest you from an M&A perspective ahead of that, or you think you probably think you have a pretty good idea of what's out there and Prognoz is the best option?
We are not interested in M&A. We have no intention of buying stuff that's kind of ready for development. Our focus has increasingly been on greenfield exploration. We have signed the first joint venture agreement with a junior. You may have seen the press release. We hope to sign at least 2 in the next 6 to 9 months, 1 more in Russia and 1 in Kazakhstan. So we believe in terms of capital allocation, greenfield exploration is a better application of capital compared with M&A, because frankly speaking, either the assets are really unavailable or they're available but they don't satisfy in terms of quality. So we just don't see the targets.
Thanks. And perhaps you could just remind us in terms of your management incentives and KPIs, what are the main ones that you are assessed on? You mentioned safety as one of them earlier in the presentation.
Well, the top management, I personally have production volumes, costs, projects execution, and safety. Safety as in lost time injury frequency rate, but also we have a so-called penalty element. So if there is a fatality, regardless of what the frequency rate is, the bonus, first of all, the safety bonus goes to zero, and other elements of the bonus are also penalized. And that principle cascades down to the operational level. So a managing director of an operation which suffered a fatality not only doesn't get any bonus for safety, his bonus for production, for cost, for something else that varies is reduced.
Thank you very much.
Yuri Vlasov, Sava Capital. Two questions, housekeeping, both on MySquare. First, you mentioned the grade of concentrate at Kyzyl. Could you remind what's the current grade at MySquare? And the second question, could you explain a bit more the technological process at MySquare?
The current MySquare grade is
55 to 60.
55 to 60, yeah.
That's the concentrate grade at MySquare.
And the second one, the technology, the processing technology?
How do you run MySquare?
Well, roughly 2/3 of the feed is sulfide ore, so conventional flotation, and the flotation concentrate. And 1/3 of the feed is oxide ore, which first goes through the flotation, and then it's cyanide leached. So oxide ore processing generates two products. The sulfide concentrate, which is actually low sulfur, low arsenic, and that we sell to Japan, not to China. And the loaded carbon from cyanidation circuit. Loaded carbon is shipped to Amursk for stripping, dura production, and regeneration, and that carbon goes back to MySquare. We decided not to build the desorption, electrolysis, and melting shop at MySquare because it's quite expensive and the energy costs are very, very high.
Hi, it's Dan. Excuse me, Dan from UBS. Couple of follow-ups on MySquare. In terms of the brownfield project targets to reduce all-in sustaining costs by $250 an ounce, should we assume take the 2018 costs and see 250 less that as a target?
That's right.
And over what time frame would you expect to achieve that?
Yeah, the first part of the question is yes, that's precisely what is. And as you can see, the completion of the Polish project is targeted for 2023. So it's actually really a pretty long-lived effort with full impact to be felt only in 2024. However, our success in terms of converting the resource to reserve at lower levels suggests that MySquare will be a very long-lived operation, probably at least 20 years. So we believe this investment will definitely have a very nice payback over the life of mine, and it will strengthen the competitive position of the operation, make it more resilient against the potential decline in gold prices.
And then to follow up on that, how many years worth of oxide do you have left? How many years of oxide processing?
Next year is the last year.
Okay. And then just a final question. Is it possible to move to all year round shipping at some point? I believe Arctic LNG cargoes are using icebreakers to go down that route. Is this something that could be possible to ship all year round instead of building working capital?
Wow.
If
That's one of the positive risks of the climate change in our case, but
Not something
it's
that's
very. I think it's rather remote, so it's not the nearest couple of years.
I would say probably the extension of the navigation period, because currently we have navigation from realistically from August to early November. The extension of navigation to encompass July and maybe second half of June, that is a possibility. But full year navigation, if you ask me, this is a bit of a pipe dream.
Thanks.
Any webcast questions?
Also, we've got a question from the webcast from Kojevnikov Dennis. As for Kutyn, you mentioned that the ore reserve estimate scheduled for late 2019. So you may sell the assets after you get the estimates?
Over to you.
If we find a willing buyer before that and he is ready to pay the target valuation, then we'll definitely sell before.
Well, there is an interesting dynamic emerging in the market for gold assets in Russia. Historically, the potential contenders were kind of the mining companies, which were not particularly interested in getting the formal reserve estimates confirmed by the auditors or by competent persons. They would take the raw data and they would build their own models and they would do their own reserve estimates. So in terms of Kutyn, the data is there. So what we thought, the kind of professional investors would come in, take that data and derive at their own conclusions, make the bids. Well, that dynamics has changed, so now we have a different breed of potential buyers. Those are more like financial investors or investors outside of the gold mining industry, which look at the gold mining projects. And they show very strong appetite for formal reserve assessment complete with preferably external verification. Hence the need for the reserve estimate, formal reserve estimate, as an important element in the sale process. This is something that, frankly speaking, I have not expected when we decided to start the sale process, and that has slowed us a little bit for Kutyn and to a lesser extent for Veduga. For Mamenskoye, for example, that has not slowed us down because the formal assessment has been complied 5 years ago. But for Kutyn, this is the dynamics.
Another two questions from same person. The first one is about share of silver. What is the preferred share of silver in total production and how it may change with the launch of Prognoz mine?
Well, for now, I think the share of silver is around 20%, and it will gradually decline in line with the kind of production grade and production dynamics at Dukat. Prognoz might, effectively replace Dukat in terms of the volume of production, so we'll be back at the same 20%. But it's not happening before, I guess, 2024, 25.
Well, if 20% is the number for 2018. As we look in 2015, we sold 2 assets with significant silver production, Hakanja and Kapan. At Dukat, we see grade erosion. At Omolon, starting from the next year, the production will be more or less stable, but Sopka, the main source of silver, has been depleted. So even within the stable 3 years of gold equivalent production, the share of silver will decline, probably closer to 12-13%. And Prognoz, frankly speaking, is too far into the future to put any hard numbers on it.
And the final question from the same person about all-in sustainable cost. With the extension projects at Vora and Mayskoye, do you plan to decrease overall group all-in sustainable cost below 800? And do you have a set target?
Well, we don't have a set target for the long term. As the person is rightfully alluding, it will all depend on individual cost dynamics at individual projects. So I'm probably not prepared to give you an all-in sustaining cash cost number out there in 7 years' time when the Mayskoye project is.
Yeah, well, this is the potential impact, not the potential, the planned impact of individual projects on AISC. As you can see, with the exception of Mayskoye haulage and Mayskoye and Vora flotation, they're not very significant, and Mayskoye and Vora, the important projects, are pretty way far into the future. We are talking about the impact of these projects in 2022 at the earliest. So for the next several years, we don't see a meaningful impact. And further on, I think it's a bit premature to forecast costs.
That's it.
Hi there, it's Boris Nielsen from VTB Capital. A quick question on 39 slide on target life of mine improvement. Firstly, on the technical question, do you include NESDA into calculations in 2022?
Yes,
NESDA is included.
yes, of course.
This is all based on reserves.
This is, by the way, in terms of the life of mine definition, this is total reserves divided by annual depletion of reserves. So this is the effective life of mine. Importantly, not by production, by depletion.
Okay, so basically just a general question on this. The company has made quite good progress in terms of improving its life of mine for the last couple of years and is going to increase it even further by 2022. So the question is whether the 2022 level is your targeted level at which you would like to maintain it going forward, or you're going to, or maybe you have strategically even higher life of mine going forward?
I'm a bit wary of setting very long-term operational targets because normally the reality kind of defies long-term forecasts. I think 16 years is a good number because it places us roughly in the middle of the pack of the global mining companies. Now, when we talk to investors, clearly, some of them, particularly long-term investors, pension funds, they would love to see 25, but the target should be realistic. And I think getting to 16 and then maintaining it for several years is realistic based on what we currently have in the portfolio. Definitely, we hope, we aspire to a longer life of mine, but that can be achieved only if we have successful, significantly successful greenfield exploration campaigns which target the type of mineralization which lends itself to the construction of very long-lived mines. But this is speculative presently, so we stick. These are the numbers which you can hold me accountable for. Anything else is a bit of a fantasy presently.
Okay, thank you.
All right, well, seeing no further questions, I thank you very much for your attention and for your active participation. Have a very nice day, and please feel free to catch up with either our IR team or with the management directly if you have any follow-ups. Thanks again.